We have heard claims that we are in a caffeine bubble. We have heard claims that we are in a shoe bubble. But are we in a pizza bubble? That is the question we have to ask ourselves. This is a viewer requested video today of Papa John stock. Shout out to Major Speed, who is a channel member who requested I do this because when you're a channel member, look at the link description, helps out the channel a lot. I will do a stock analysis of your choice. So today we're going to be doing a financial overview of Papa John stock, giving my honest, unfiltered thoughts. I don't have any, my toes in the water, you could say. I don't own this company yet. I will say this, I'll go on record. I think Domino's is a really interesting company, and I'd love to own it, but at the right price. I was thinking of buying some at like maybe 340, 350, and it just never got there around this summer, and it's at like 500 now, which is why you don't try to time stocks. But regardless, I really like Domino's as a pizza play. I'm a huge pizza connoisseur. It's my number one go-to refeed meal on the weekends. And you know what? We love pizza here on the channel. So how could you not? Are we in a pizza bubble? Let's find out though. All right, so pulling up dividenddata.com, we have Papa John's. They took a tumble after earnings. From what I see, I'm not doing like a crazy deep research into why it's actually down, just revenue and EPS misses. So, and it looks like year over year revenue has not been growing as well. So, not bullish. They're not bullish, but obviously we could see it's on a bit of a dip here, down from $140, and we are at around $60 now. So, could this be an opportunity? We have a not a forward P ratio of 21.5, dividend yield of 3.45%. So, if that's something that interests you, there you go. Looking at revenue, actually really good, interesting revenue growth here. 5-year growth at a 5.75%, 10-year growth at a 6.94%. Nothing wild, but still very consistent revenue growth. Good to see that that's been, somewhat consistent over time. Looking at the margins, because we love margins in our business, gross margin at 31.45%, operating margin is 6.56%, and net margin of 2.85%. So they're all right. They're pretty solid. They remain consistent over time. We want to see consistency over the last 5-10 years. We could see obviously outside conditions will impact margins, but if you can find a great business that really the margins just kind of stay same over time, definitely a positive thing to see. Yes, we can see they kind of trade flat. Positive things to see there. They took a big decline in around 2016. Don't know why there. Looking at the free cash flow, most important metric in any business, and here's where I get a little hesitant. Ideally, with your companies, you'd want to see more consistency here. If you cover the stock way heavier than I do right now, there's probably a reason why the free cash flow is negative for this year, but I'd like to see why. But overall, I mean, last 10 years, it's done a solid job. 5-year growth at a 29.82%. So that's obviously a little inflated because of that one bad year, but 10-year growth at 11.73%. So it's solid. I don't know, like qualitatively speaking, like what's the advantage of, Papa John's or other pizzerias? How are they doing compared to Domino's? Because I feel like Domino's, like nationally, is the number one go-to pizza chain, at least from my perspective. And I think they're doing a lot of better things that I'm paying attention to right now. I've never really been to Papa John's. I don't know the experience. Dividends, since everybody loves their free money, dividends. Pretty solid dividend growth, actually. 5-year growth at a 15.38%, 10-year growth at a 13.92%. So very solid dividend growth, actually. So if that's something that you like, there you go. Based off of the free cash flow, current payout ratio is 50.2%. I think that's pretty sustainable. And based off of net income, 71.2%. That's bullshit accounting, as some would say. I really don't pay attention to the net income. After the recent earnings, I'm wondering if that will spike back up. But as for now, it looks pretty good. We'd see obviously that payout ratio was kind of reflected over that one bad year of free cash flow. So I think if they continue this free cash flow production, the dividend should be fine. They buy back shares over time. It's a positive thing to see. We can see they recently bought back 7.16% of shares as the stocks have been trading down. So interesting stuff here. I mean, financials are pretty decent to me. Valuation wise, price to free cash flow. Yeah, obviously it's on a big discount now. I don't know if it's like enough for me to actually seriously look at it. I prefer Domino's over it. I'm sure there are deeper reasons that I simply do not know of why the company's like actually trading down. I'm sure for you, those of you who actually cover the stock, you'd be happy to fact check me in the comment section. This is a viewer requested video. Please don't come after me. Return on capital employed, because we love companies that make their money back, reinvesting in the business. We could see it's actually been historically really solid, 22.74% right now. It's really solid for a restaurant company. And we could see quarterly that has been around 5.97%. That adds up 4 quarters. So that adds up to about 22% every year. So I think that's honestly pretty solid. Um, I think my real questions would be like, what are they doing to kind of differentiate themselves from a company like Domino's or local pizza chains? Because if I'm thinking of a pizza company, I want to invest in a restaurant, a pizza company. I'm familiar more with Domino's. They have really good deals. I think their quality of food's actually gotten really good in the last few years. Um, I go to local places for pizza when I get it, but I occasionally, if I do like a national chain, I'll do Domino's. Like Domino's, I've been on record on the Cash Flow Kings Live. Go subscribe, link in the description. But I've been on record of saying I think Domino's is a tech company that happens to sell pizza. They quite literally innovated like the whole ordering online thing. I love what they're doing with their menu recently. Oh, they're investing in AI. They're an AI pizza company. The only thing that really concerns me with it, I'd say, is valuation with Domino's. I've said that before. I think the valuation's a little lofty. I also didn't look at debt, so I think that is something I should probably look at. I'd assume it's from store leases, so I'm not going to harp on. Yeah, it's very similar to Domino's. I just in Starbucks and other restaurants. I'd assume it's just store leases, but overall, company looks all right financially. I'd have to do a way deeper look at them qualitatively. Why they're trading down this amount? Was there a bit of a bubble there? Are we in a pizza bubble? Who knows? All right, let me know your thoughts on it. Link in the comment section. I'd love to hear your thoughts. Thank you once again to Major Speed for being a member. As a member, I have to do what you say. I have to do anything. I will bow down on my knees for that $5 a month. Link in description if you want to check that out. Subscribe, do dividends, stocks, that jugs, and of course, remember, cash flow's king. Have a good one.